the tax imposed by the government, yeah, on the income of individual or the group of the people is called income tax. The annual income up to a certain limit as per the minimum needs is tax free or called exemption limit of the tax, and the income tax above the limit is taxable income. So suppose your income is 100, tax exemption or tax free allowance is suppose 40 rupees, then the remaining amount is 60. You need to pay the tax of remaining 60 rupees. This is general concept in terms of 100. I told you that. And about the value added tax, the value added tax is levied or charged on the value added on the goods and services in each step of the product and distribution. Suppose I bought an article for Rs 5,000, I mark up it 6,000, and I will charge 13% tax, that is also VAT, 6,000. Then I will sell to Hari, and Hari again add some more amount in his cost price, and again he will charge 13%. In that way it goes up. So that is called value added, because the value is added. But I will get back my return amount, tax amount that I paid, but how much amount I have added of that amount, and total amount will be paid by the person. I mean, suppose the cost price is 5,000 plus 13%, but I have already paid, this is my cost price, means that VAT is included over here, and 13% including that will be the cost price for next person, and they will again add some amount and will be added 13%. But I will get back how much amount I have paid before, and how much amount given by the person, then the difference amount I will get back. Or there is a system about VAT. The details you will be studying in grade 10, but here just the word, and simply we have to add VAT in selling price. If you understand that much, it will be okay. Okay, now moving to the next part, dear students, let me observe. Yeah, tax free amount, some there is some rules about tax free amount, or is a few on. Okay, there are others also, but mainly we will focus on. If you deposit on employees provident fund, karmachari sanchay kosh, but here is a condition apply, that is tax free allowance. Okay, and deposit amount of civil investment trust, nagarik lagani cost, here also condition apply. If you want to go through this, please search karmachari sanchay cost, nagarik citizen investment from Google it and study more if you want to explore yourself. And premium expenses as a life insurance, this is also condition apply, means there is some restriction, not all the amount deposited in as a premium, so there is also limit, but that is taken as a tax free. Yeah, donated amount, दान गरेको सिलाई भने, yes, that is donated amount. And obtained amount is the remote amount, that durgam bhatta, I think. Yeah, and 75% of foreign allowances and medical expenses, this is tax free. First develop your knowledge about what are the tax free allowance, then if you want to explore about how they are tax free, then Google it, go through that. If you want to study more, visit karmachari sanchay cost, that employee provident fund site, civil investment trust, life insurance, and like that you can study yourself. But here the topic is important for us, knowledge is important here. If you have some amount on deposited on employee provident fund, then that will be tax free for us. In this case we are simply taking that as a tax free, but there are many conditions, then you can explore yourself. I cannot go out the details now. Now moving to the next part, dear students. here I want to show you about the tax. Yes, here we have to study. The annual income of a person is 4 lakhs annually. That is year annually. Okay, it is not required. If he pays Rs 50,000 to the employee provident fund, find the taxable income. Dear students, again I have to focus employee provident fund. If he has deposited 50,000 in employee provident fund, that is taken as a tax free amount. I already told you about the condition. And now we will calculate the tax in terms of a year. Annually we will calculate. So his annual income is 4 lakhs. Tax free allowance, that is 50,000, because he has deposited 50,000 rupees from his annual income to to employee provident fund. So that is tax free allowance. So taxable income is annual income minus tax free allowance. I think you understand this. 4 lakhs minus 50,000, in total is 3 lakh 50,000. Then according to the rate, now you will get you will pay the tax. Dear students, listen again. Annually we will pay tax, we will calculate tax in terms of annual income. His or this person's annual income is 4 lakhs, but 50,000, here we have focused only the particular case. Remember, this is a particular case, employees provident fund. To memorize, to remember, in case of employee provident fund, what can we do in case of tax, you will understand in that way. That's why this point is added over here. So that is as a tax free allowance, tax free amount you will take. So from his income it will be deducted, and remaining of the amount will be taxable income. I believe you understand. Please response. Please response in your chat box. Now moving to question number 2, dear students. What is my question number 2? Yes, this is question number 2. Let me go through question number 2, dear students. It's also the similar case, but but something is different. Annual income of a person is 4 lakhs. Here also he pays Rs 75,000 to civil. He pays this, or he deposit also. He can yes, he, he deposit Rs 75,000 to civil investment trust. Find the taxable income. In this case, here you can find annual income. I already given that point. Tax free amount, sorry for that, here 75,000. Yes, and taxable income is 4 lakhs minus 75,000, that is 3 lakhs 25,000. Here the second point that I want to add is, remember, the amount deposited in civil investment trust is tax free. We will not pay tax for this, but condition apply. We will not go through that conditions, but here simply we will think and apply. This is generally the amount deposited in civil investment trust is tax free. And moving to the question number 3, dear students, let's move to 3 number question. Here the 3 number question is like this. Here also third part. The annual income of a person is Rs 4 lakhs annually. Yes, if he pays Rs 20,000 to the premium of life insurance, or is a premium of insurance, life insurance, you know or not about life insurance, you can ask with your parents if you are not getting that. Is a premium if you paid Rs 25,000, which is also tax free. So from 4 lakhs it is deducted. So this is taxable income. A person annual income is 4 lakhs, paid 25,000 rupees as a premium of life insurance premium, then his taxable income will be annual income